Hi, I'm Peter Rose, founder of Longwood Currency Trading. To paraphrase the Rolling Stones, you can't always get what you want. And in Forex, that is so true. And I'll give you a little example of that, going to the charts and taking a look at a trade that I just came off of this morning. But talking about you can't get what you want, we had hoped that the snow had passed in the last storm that we got. It was a really slushy, wet storm. And last night, boom, we got hit, and there was about 6 inches left on the ground, and we picked up another 9. So there's about 14 or 15 inches out here. The Bo dog likes it. Bo, say hi to your fans. He doesn't care. But it's just beautiful up here. This is being filmed on the 30th of January, 2024. And it's cold, so we're going to go in and look at those charts. Okay, this is a little better. I got a hot cup of coffee here and in the library, and I'll throw up a diagram or a chart picture of this situation that we face today. And let's take a look at this. This is a pound dollar. Again, this is January 30th of 2024. If you look at the hard right edge there, there is a 1 hour bar, a red bar that's pretty extensive. It's a 48 price action slam, is really 48 pip price action slam is basically what it is. You can see from the top of that red bar down to where it flaps out down at the bottom. It's 48 pips. And what's interesting about it is that you can't always get what you want, according to the stones, and if you look down below that, where the bottom of that pin bar is, which by the way is a 25 pip pin bar, there's a dotted green line, and that was my profit target. I was on a long target for this particular position. The USD JOLTS report was coming out. I figured there was going to be some big swings. There was a positive upward swing. You can see that it was about 10 or 15 pips, and then you get the long candle body and then the 25 pip tail on that. But this was a result at 10 o'clock. That's the 1 hour, 10 o'clock 1 hour candle that's red that we're looking at. It's 48 pips. Okay, so if you look below where that tail ends on that red bar at the end of the 48 pip move, that's at 2640, 1.2640, and the green dashed line below that is at 126.33. 7 pips below is where my projected thought process was at 8 o'clock in the morning. This is where I set that take profit target, and 8 o'clock price was somewhere around probably in the 2701, 1.2701. So it was quite a bit above where that all that 10 o'clock JOLTS report action took place. In any event, if you're looking over to the left there where that second lower drop has occurred, there was such a violent drop that was the 8:30, 8 o'clock, I'm sorry, that was the 8 o'clock, that red bar, that big drop bar. It was an 8 o'clock bar, and I'm in there and watching this thing go. You look at the next bar, which is a big pin bar down, ended up being a green candle. Well, I got very shaky at the length and dramaticness of that red candle, and then the precipitous drop from the close of that candle until the next hourly candle, and that thing just went like shit through a goose down. And I thought, I'm gonna drop onto the 5-second chart. No shit, 5-second chart. And I'm gonna watch this thing because I don't know how far it's gonna go. So I watched it get down to the 2662 level, and then it started to turn around and chatter and head back up. And so at I'm looking at the chart here. Let me just see it. 2667, I think it was. I pulled out, and I just didn't like the way price action was acting. This was again at 8:30. The JOLTS report wasn't coming out until 10, and all this bullshit is happening. I got out. So I made about 850 bucks, I guess, on that trade. In any event, if I wouldn't have got out where I got out, it would have cost me $3,000. And so I made 800 when if I would have stayed with that, I would have got caught. Maybe I would have got out, maybe I wouldn't have got out. But if I would have stayed with it until that next hourly big green candle, and I wasn't if I wouldn't have been paying attention and just hanging on to it, waiting for the JOLTS report, which I thought was going to go down, I would have been standing at a $3,000. I would have been standing at a $3,000 running loss. You can't always get what you want. I was looking for about a $2,700 gain, $2,800 gain. That would have matched my performance the day before, yesterday. I made about $2,700. That day I made $27 the day before, and I lost $2,200 the day before that. So I'm getting ready for this JOLTS report and saying this could be a very dramatic move, and it was. 48 pip flip is pretty dramatic. And I think that the potential for that is to drop to that 126.33 level that I had shown you on the chart, where the dotted green line was. It didn't quite make it. It made it to 26.40, 7 pips above where I thought it was going to get to do, but pretty close to where I thought price would get to. And in which case, if I would have been in the trade at that point during that period, and it would have gone to 26.40, I would have still been in there, and then it started to retrace. I would have probably got out because of the dramaticness of the move, and I probably got out at 26. Oh, I don't know, 45, 48, something like that. Maybe I'd have taken 10 pips. So I would have made, probably probably about I probably made about $1,000 or $1,300. With all that drama, I think I am pretty happy with the 850 that I made without that drama. I mean, I'm looking over here at the chart going, holy shit, are you lucky? You made $800. You could have lost $3,000. If you would have weathered through that, you'd have made maybe $1,300 by the time you woke up with the thing pin barring back against you. You can't always get what you want. So I just thought you'd be interested in this little drama of a trade during a fairly important U.S. economic report that came out, and how I had thought about that upcoming report, where I thought price action would go. The fact that it went halfway there from where I was at 8 o'clock in the morning when I was putting these positions on, to the time where I pulled mine off, watched it go crazy, and just was amazed. Now you might have said, well, once the thing peaked out and started to go back down, you had a JOLTS report come out, because it started to retrace. Let me take a look at this. I just didn't feel comfortable with the price action. And I could have got in there and gone in maybe like with a 3-lot and tried to scalp back and forth. In fact, I had looked at a position, said, I'll watch that, and if it gets to here, I'll drop a 3-lot in and ride it short, because I was going to go short. And then if the price would continue on, I'd pop another 3 and another 3, and I'd just keep going until the price reacted against me. And I knew that if price was going to react against me, because my staging would have been close together, I'd have probably lost 2 and possibly 3 of the stage points that I had made. So it would have been an iffy trade. So I wasn't really paying attention. I had a mental note that, hey, if it gets to here and it looks good, I'll probably go in. I turned away. I was responding to an email, and price went through that. It went down quite a bit. I think it went down like 10 or 12 pips, and then it flipped around and went up 10 or 12 pips. And, you know, I'd have been okay, but that's not how you trade, by messing with that sort of inconsistent volatility prior to a major financial release, which is not news, it's an economic release, and so you have to pay attention to those things or you'll get caught. If you wind the video back to where I was showing the chart and you see that 48 pip move, there was probably 15 pips on an upward move just as the JOLTS report was coming out, and then it slammed back down. The candle body went significantly down, and then just kept right on going over the period of the rest of that hour to complete that 48 pip move, and then pin barred back 25 pips to form the solid candle before the candle closed. So do you really want to be involved in that? I was probably more aggressive than I should have been by getting into a position at 8 o'clock in the morning prior to this major release, given the volatility that was going on at that time. Generally, prior to a major release like that, price will just chatter in a range. I mean, it could be a 20 or 30 pip chatter, but it just bounces around until the release comes out. Now, 15 minutes before the release or 5 minutes before the release, that was where that upward pin bar was coming from. It's not really a pin bar because it's got a body. It's more like a doji, but quite a doji, huh? It just wasn't acting the way that I thought that it should. I got in there, thought I'd go for the long shot in case everybody's going to pile on early or somebody didn't know something I couldn't see on the chart. And I took the long view of it because I thought, well, this is going to be a violent reaction because there was a lot of volatility during that period. If you can see where my thinking is coming. And you notice none of this stuff has anything to do with Bollinger Bands or Fibonacci's or levels or any of that kind of crap from an indicator standpoint. It has to do with trading. I trade. I don't look at indicators because they don't make any sense and they're not applicable to really determining what the order flow is going to do in the period of time that you're going to be there sitting at the charts trying to put a trade plan together. In any event, I hope that trade plan made sense to you. You can see the two major component pieces of it. Actually, the three component pieces. There was the piece where I got in and then got out. There was the piece where there was a retraction and the result of that, and then the reversal to that. That was a piece that I was looking at and thinking about getting back in on the trade. And then there was the actual occurrence of the JOLTS economic release and the price action that ensued as a result of that. And the what if and you can't always get what you want and all the rest of the stuff that goes with it. If. You know, the saying that I always say is that, you know, if the bear wouldn't have stopped the shit in the woods, the hunter would have never seen him to shoot him. So you can if yourself to death, but you can't always get what you want. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.